what can we expect from Asia given the underperformance that we continue to see? Is there more hope given the valuation levels right now, or are we going to be continue to be impacted by other factors like uncertainty in China?
Yeah, you really have two elements to understand the underperformance of Asia. First, you have Asia ex-China, which is underperforming the global market, and then you have a specific China issue with China underperforming Asia. And I think this is really the two broad issues that we have on Asia. One is have we seen the end of the reflation trade? And by this, I mean we have some signs that the 2022 earnings are starting to roll over. And certainly Taiwan and Korea are not going to be as big contributor to profit as they have been last year and this year. And so this is one concern, which is making us rather cautious on Asia. And then the second one is China with the major policy shifts that we've seen over the summer and the Evergrande crisis coming and some question mark whether it could be a systemic crisis. So we really have these two issues, and how we position in Asia is we find that among the large market, if we take one view, looking at the valuation, looking at the potential, that is probably on China that we will see the most upside.
Oh, you're expecting China to see more upside given the valuation levels from here?
You have today the valuation in Asia, which are at a really very dispersed level, with India on the one hand and China on the other hand. MSCI China has become the lowest valued equity market in Asia, actually, and so that's interesting because we had a premium before the summer, so this premium has become a discount. And we start to see the risk perception, the risk premium rising again. So now you have a number of serious risk and in China, especially the one around some systemic risk with Evergrande. But we believe that the market remains investable. That we are not seeing a general assault on the private sector. And if we have this premise, then this is one market on which you could see the greater upside. And probably the greater downside as well. So this is very much where the volatility is going to be the highest.
We did see today, though, besides the difficulties around Evergrande, also Tencent dropping out of the top 10 most wealthy companies in the world by market cap. The trend line around all this regulatory risk does seem to be down. Why do you see that changing?
Yes, so you have one part of the market which is in the heart of the storm and the internet tightening, which has intensified and which has some on which you have some headwind for probably the next couple of quarters, whether it is on the regulatory risk, whether it is on governance, and even some cyclical headwind which are impacting those names. So that's why we see actually the upside to be more on the onshore than on the offshore part of the market. And I think it's a little bit early for the bottom fishing in the internet space.
Are there any other markets in emerging Asia that look more appealing than China right now? Yeah. So what we see in the rest of Asia, well, you had this underperformance as the pandemic, and the response to the pandemic has been some explanation, and also what we see is that the two top star market, Taiwan and Korea, in 2020 until the peak of February, well, they are going to contribute less to earnings. This is probably where we take the more cautious view again and taking a one-year view. And then you have India, and India has, well, against all expectation, has been performing extremely well. You had this domestic money really being active. And finally, the second wave, which has not hit the economy as we could have feared. So this is explaining the strong performance. But now, looking at where we stand in terms of the valuation, really both in terms of the history, in terms of other markets, we cannot get more than a neutral view on that market.
Frank, I just quickly want to get your thoughts on Japan as well, because the planets really seem to be aligning there, particularly in terms of PE ratios. What opportunities are you looking at in Japan?
Well, you could see both some domestic catalyst and what's going to come from the external, and especially from the US. Well, we've seen the equity market has underperformed, and among the reasons you had the state of emergency, the pandemic, and here, well, you could see some improvement here. You could expect some fiscal package to support the domestic economy ahead of the general election. Well, the size is not really something on which we have any indication. So these are some elements which could help to support the market. But I think the big story for me on Japan, and especially when we look at it from a global asset allocation point of view, is what would happen if you see the US Treasury yield rising and, well, getting back to where they were at the beginning of the year, let's say 1.7%, and at the same time the S&P being resilient. And if you see this combination, then probably the Japan equity market would be the one where you want to be in Asia, because what we've seen over the last 3 decades is this very strong relationship with the US yield and with the bond market, and this is something that has continued over the year.